Hi guys, welcome back to the YouTube channel. Today we're talking all about crypto, the tax on it, and how you can avoid it. So at the time of recording, Bitcoin has literally just reached an all-time high, $97,000. All of the meme coins, all of the altcoins are doing really well. Lots of new millionaires being made during this crypto cycle, and as a result, lots of potentially massive tax bills come in for people that are unaware of the taxes on crypto, especially as a UK taxpayer, and unaware of how to avoid them. So the first place we'll start really is just by talking about taxes on crypto in the UK. So with taxes in crypto in the UK, there's two elements to it. The first one is for people that are basically trading crypto. So where you've got that repeat transactions, you're trading the highs, you're trading the lows. Some trades you lose, some trades you win. There's basically a high frequency of transactions. And when you're deemed a professional trader, you basically pay income tax on those profits in your own name. So especially if you're talking six-figure profits, which we will be for the purpose of this video, you could be paying taxes of over 45% on that income. But most people are probably some kind of investor. So you brought it and you're holding it long term. You're going to sell out later in this cycle, next year, next October, and you're not actively trading it. You might be adding more. You might sell a little one as you get some gains to put into a different opportunity, but you're not actively trading. You're not doing 10, 20, 30 transactions a day. It's more of a long-term investment, and that's when it's taxed as basically a capital gain. Just as if you kind of brought shares or stocks or sold a property. And the tax rates on that in the UK are a little bit lower than those income tax rates. So at the moment, they're 18% for gains up to £50,000, including other income. But again, six-figure gains is what we're looking at this cycle. Lots of massive gains taking place. So for the vast majority of people, you'll be paying tax at 24% on your crypto gains. I'd like to just take a minute to pause this video here to make sure that you have hit that subscribe button and hit that like button, because it helps the video get to as many people as possible. Back to the video. The way the gains are calculated is very, very straightforward. So literally the total cash amount that you put in, so in terms of your fiat currency, pounds, dollars, what did you put in, what are you getting out? The difference between the two is your profit for capital gains. And you must be careful, because I mentioned there you might be selling one currency, one token or coin to buy into another one. That also counts as a disposal. A lot of people are looking at their crypto portfolios as a whole. Okay, I might have sold a little bit of Bitcoin, bit of Solana, but I'll put it into here. That doesn't count for tax. Unfortunately, it does. So if you sell out of Doge now, you've got a pretty decent gain. Well, actually, if you do that whilst you're a UK tax resident, right now, there will be tax to pay on that gain, even though you put the profits from that and all the funds into another coin. So that's the first mistake you want to watch out for. The second is essentially making sure that you're not UK tax resident when it comes to cashing out of your portfolio entirely. Of course, if you've got little small gains here and there, that might be manageable. 24% in the UK. It's not the highest rates in the world, but you know, that is a quarter of your profits, and we're talking big profits this crypto cycle. That's a lot of money going over to HMRC in taxes on your crypto gains. So what you want to be doing here is looking to leave the UK. If you've got 6 or 7 figure crypto gains, it's absolutely imperative that you probably get out of the UK ASAP. In terms of your personal residency, there's tons of different options. We'll talk about that later in the videos, where you could be ending up in terms of bases where you can be taxed at much lower rates, if not 0% in most cases. But the first thing you need to be doing is looking at leaving the UK if you're a serious crypto investor with serious gains. As we've seen, 24%, potentially up to 45% if you're a trader. And there's a couple of different anti-avoidance rules we're going to talk about now, which is we'll start with basically the taxation if you become non-resident. So when it comes to leaving the UK, you can leave the UK now, you'll be taxed under a split year. Most likely, if you cease to have UK employment or a full-time home here, then you'd be able to qualify for the split year treatment, which would mean your capital gains that take place when you move overseas will be tax-free. And of course, if you don't qualify for the split year and you move overseas for the full next tax year, as long as you don't sell right now, you sell next tax year when you're non-resident, you shouldn't need to pay any capital gains tax. But, and there is a massive caveat to this, HMRC have a 5-year temporary anti-avoidance rule. So if you move overseas for a temporary period, they define that as 5 tax years or less, all of the gains that accrued, so of course we're kind of well into this crypto bull market now, so there's a lot of gains that are taking place, and you're still tax resident potentially if you're watching this in the UK. All of those gains that have taken place to date until you leave the UK, they are subject to this clawback provision. And basically, it's if you move back to the UK within 5 tax years of becoming non-resident, those gains that are attributed to the basically the gains that are contributed whilst you're UK tax resident, they will be taxed in your year of return if you do not stay overseas for 5 full tax years. So that's definitely a big thing to watch out for, because a lot of gains are probably already taking place. Of course, there's more to come, but for what's taking place now, if you want that tax-free, you need to leave the UK for 5 full tax years. The second opportunity is if you're non-resident for next tax year. As soon as you become non-resident, any gains from that point onwards are tax-free, even if you return within 1 or 2 tax years. So there's 2 ways of playing it. If you think that there's a lot more profits to come, you could potentially move overseas from the start of next tax year, sell out, and the gains that if you've got decent gains that happen in that window, they'll be tax-free, even if you come back to the UK next tax year. But all of the gains that have taken place to date will be taxed in your year of return. Countries that are popular for crypto investors, as you know, people watching this channel, we specialise in working with Dubai. I spend a great deal of the year in Dubai. It's a fantastic place to live, and it's got fantastic tax regimes. It's simple, 0% income tax, 0% capital gains tax. So as a result, for any crypto investor looking to completely avoid taxes, Dubai is the best option. Some other countries that have 0% capital gains tax, you've got Malta, Georgia, Hong Kong. These can be great places to base yourself if you want to avoid the capital gains tax on your crypto. We specialise in helping people move to Dubai, getting companies set up, getting your freelance permit, whatever it might be, getting you your visa so you can base yourself there legally, spend as much time as you want, and we can also help with the UK side as well, offering reviews to make sure that you fully understand what this personally means for you. It's all well and good watching this video. Okay, we've got some temporary anti-avoidance rules. How do they apply? That's exactly what me and my team do. We look at your personal circumstances, give you the information you need to make sure you genuinely are saving tax. When it comes to saving tax, it's always a long game. It's not a short game. You can't just move overseas for 1 year, potentially not pay your taxes. If you don't know about that 5-year rule, actually in the long run, when HMRC find out, and trust me, they probably will, in the long run, you'll be paying a lot more tax, potential penalties, potential fines, interest on underpaid tax, and everything else. So me and my team, we help you do it the right way. We look at your circumstances, give you the advice you need, and actually help you get upset over there if it's somewhere such as Dubai. And if you're looking at other countries, Thailand, Hong Kong, Malta, Georgia, we can find somebody to help you get set up over there whilst we handle the UK side. And that's all for today's video. Hope you found it useful, and if you want to book a call with me, click that link in the comments below. Bye for now.